Neil, are you seated or are you running around the room?
I just got back to my seat. Look, Tom, I trust a lot. Just going to Tom's point, I think for your audience, it's not about trusting the data. It's about trusting the people interpreting the data, just in the same way political polls, right? The polls are off. No, the polls aren't really off. What's off is the people's interpretation of those polls. And that's what's going on here. Keep an eye on part-time employment, part-time employed for economic reasons. Anyone who talks about that, it's a tell because it went up.
Neil, just because of time, I want to go on this. I think it's absolutely historic here. I'm gonna fold it, and there's other names as well, folks. Neil Dutta, along with the great Jim Glassman at J.P. Morgan, with his decades of study of the labor economy. He owned the study of teenage employment years ago. And John just mentions Neil Hollenhorst over at Citigroup, who came within the vicinity here. What are we getting wrong about the fabric of American labor when it's staring us in the face with large parts of America with 2 and 3.0% unemployment? Why are we getting this so wrong?
Well, I think it starts with, the underlying economic momentum in the country, which is picking up. It could well be that, conditions are picking up. Employers had positioned for an alternative outcome for things to be slowing down. Now they find themselves having to play catch up to that stronger economic growth. Look, the underlying rate of employment is not 520,000. That is true, but it's probably higher than where the consensus believes. Given what we know about the trajectory going forward, there's risk that employment will remain strong. If you're talking about 200,000, let's say it's half the rate. Let's say that's the real number, half the rate of what we got today. So it's 250,000. That's more than enough to continue pushing the unemployment rate down over time. I've said this, the onus is on the economic bears. Frankly, I don't think this is going to really change the Fed's calculus. Guys, it's not like they're going to come out and say, "Oh, we got to go back to 50." All they can do at this point is just sort of extend out the 25s.
But Neil, how much are we looking at people who are getting multiple jobs because they're trying to deal with inflation? How are we looking at one person accounting for 3 of these jobs that have been created?
I have to look at the multiple job holders as a share of employment. That's in the household data. I haven't looked at that yet, but it doesn't look to be abnormal. If you don't believe the BLS, what about consumers? Look at what consumers are telling you about the jobs market, okay? The labor differential from the Conference Board, also a January data point, that was out earlier this week. I believe it rose to a 3-month high. And it's at a very, very strong level, certainly, more or less where it was before the pandemic, if not a little higher. Again, consumers are telling you that things are okay in the labor market. And consumers, and this is drawing on research from the New York Fed, consumers have a habit of spotting changes in their own local economies before the data because they know the places that are, putting up help wanted signs. They know the places that are handing out pink slips, and they see it before the survey collectors of the BLS do. Consumers are telling you that the labor markets are fine and that unemployment is low. So if you don't want to take the BLS's word for it, maybe we can just take the American consumer's word for it.
Neil, get on the phone and tell some people I told you so. Neil Dutta there of Renaissance Macro. Fantastic to catch up with Neil.